Welcome back. Today we're going to keep the theme of simple going. I like to keep things as simple as possible because it's so easy to get overwhelmed when doing too much and looking at too much technical analysis. In the end, all we're really trying to do with anything with price is get a reference point and discern what buyers and sellers are in control and when that control changes. That's it. It's as simple as that. Then we need to get in and not get stopped and get out. It gets a little more complicated. So today we're going to look at swaps. And it's pretty easy. They're a significant part of the language of price. They're part of a swing cycle. Right, so everything has to do with swing. So just imagine a swing cycle. So they're going to be part of the impulse leg here. Okay, this reaction leg. So we're just making further distinctions in our swings. So they're going to be part of the impulse leg. They're going to be the part where price changes its mind from going down to up, where it swaps. As it's going down and down, sellers are pushing it and sellers are pushing it, and at some point they'll run into pressure of buyers, and the buyers and sellers will create some pressure in here and pop. So we're going to be looking at this swap area right here, wherever it does swap. Now, I don't want to treat this as a setup. What I want to do is, this is going to be, like I said, it's a significant place where you will find true support and resistance, where sellers swap into buyers. It's not, the very tip of the swing. It's where it actually happens. So it's significant. So it's worth us watching. So I'm going to just show how to identify it. And then we can use this as a very simple framework. This is where the simple comes in. We can ignore all the other messiness in price. Just look at swings and these swaps, just as a way to have a reference point to map price. It's like mapping price with swings. We're just taking it an extra level. Here we're mapping with swings, and then we're taking it an extra level and looking within those swings and mapping it with a swap. And so what you'll see is something like this. Price will go impulse, it'll start pushing down, sellers are pushing it, sellers are pushing it, sellers are pushing it. At some point, if it does change, it doesn't have to, if it does change, you'll see it'll make a higher low somewhere. It'll keep running into these sellers, and you'll see price, it'll start to curve around like this as sellers meet buyers. And the beautiful thing is to identify this. You don't have to guess, you don't have to speculate. You make observations about how price interacts with this area and how this area gets made up. So it's just that simple place, and you'll see the pressure and then pop. So let's put some bars on this. This comes from some recent markets. So you see I have a swing here. We'll get rid of this guy now. As price comes down, see it, feel it, there's sellers. It's coming down, sellers, it's coming down, sellers, coming down, sellers, it's coming down. Okay, it's not coming down. It bunches up, it coils up, and pop. Like that. Okay? And so this is the area I want you to make observations of as price may or may not interact with it and how it gets built. And so that's current as price comes down. So notice it's landing in that swap area. Okay, so that's the first layer of this. It's just really basic. And it's not hard to see the turn and price turning. So let's just look at a few others. Okay, so right here Let's get rid of some of this and just practice with me. Just price is going up. You're watching it now. Just follow it. Price is coming down. We can even follow it with swing. See? Swing, 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 swing. Right? Selling, new low. Selling, new low. Selling, new. No new low here, right? Now, what you want to look for is, again, where price doesn't do it with a little bitty, let's move, but all of a sudden it gets crunched, pressured, and boom, right? It's got a path. You can see, you can just visually eyeball is seller, 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 sellers, and right here they change their mind. And so what I'm asking you to do is just observe that area. Okay, just observe that area. Don't worry about being perfect with it. Just observe this area. And this is current. All right, now let's make a few distinctions. With this. So we're going to make a few distinctions in the context. So what we're looking at basically is price coming down, price coming down, price coming down, price coming down, price changing its mind, and swap. And we want to capture that area, right? Do you see here? You can just see where this is where it changes its mind and pop. Okay, so let's make some distinctions. We can make the distinction of price coming back to the area. So we're just going to make some basic distinctions in context. Price coming back to the swap before new high or low. Then after new high or low. Meaning, does it return before it makes a new high? Does it return after it makes a new high? And I want you to see this. So sometimes what I'll do is, it runs into sellers before it makes a new high, and I'll end up buying that for the new high. And then even possibly, depending on the rest of the context, coming back at it again. So you can see in this situation, price has returned to the scene of the crime before it's made a new high. And just look, it's just sellers, 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 swap. See, a line will begin to show us this. All right, the next distinction I would like you to make. Now, I'm not doing this the other way. You guys can practice seeing what a swap looks like in a market going down. All right, so I'm going to do it in a market going up. You can practice in a market going down. Just reverse everything. But let's make another distinction. How about swap area against the flow? And I have something in mind recently that I was trading that we'll take a look. So for instance, this can coincide with gap on the left. Let's say price was making lower lows and lower highs, and it started to spin around, curl around, and then pop, right? That's our same swap area. But in this case, it's a little different since it's making new lows. It might just be landing into the gap on the left. Your job is, after you learn how to identify it, is just to make observations. What happens when it comes back here in a downtrend? What happens if it goes through? So in most cases, I'll tend not to buy this swap. So don't just treat this as a setup. It has its flip sides. Doesn't mean every one of these is going to hold. Depending on where price is at, it could do this or that. Learn to identify it and then go with that. All right, so let's look at a few more things. So for instance, here's gold. 2-minute gold. We were just looking at the New Zealand. And you can see gold, it's kind of ugly, right? Comes down. But even though it's ugly, you can come in here and you can see where price was going down, going down, going down. I ain't doing no more. Pow! Right? So we can identify this. This is going to be where these sellers switched into buyers. And then you want to make observations as price gets to this area. So notice this area basically comes right back through and to the back side. Okay, so the same thing. If the market's going down, okay, you're going to follow these legs. But at some point, if it says, you know what, I'm going to quit going down, but you can just follow it, right? You can see it starting to curl around. It wants to quit going down. It's trying. Pop, right? You see the swap right here. Look. Pop. There's swaps right there. There's a swap. Now this is in the context of what? Price going down. We can just draw a median line off of this. But it does swap. And then I want you to make observations about what it does when it comes back. So in this context, this would be analogous to, say, a try trade. Okay? So that's what it looks like against the trend. And we'll just look at a couple more. I was looking at the Russell 2-minute. The other consideration for this is there's going to be a swap for your major swing and your minor swing. So a swap is relative, just like everything else, like a gap and like a swing. That's a big swing. There's no real swap area in here. And then we have a minor swing. And just tune your eyes. See where price going down, going down, going down. Swap. New high. Back through. Retest. Okay, so that's a swap that end up coming back through. And you can see, this is current, you can see how price is interacting with this neighborhood. And on the bigger leg, these sellers, 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 pop. Okay? And then, you can combine that with your median line work. You can just draw, say, swing to swing, or what have you. And don't force it. You want to see these swings to get a nice impulse. You can go boom, 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 boom. We'll change your mind. Swap. And there's various trades you can take off of this. Again, make your observations. Create your own trades. There's trades in here. There's quick trades here. There's trades afterwards. There's lots of ways to use this. It's just a significant supply and demand area. Where price changes from buyers to sellers or vice versa. So I laid a lot here quickly, but you can practice. Make the distinctions against, make it with, find a little swap area. It's not too hard. It's just contraction, expansion, sellers, swap. And then just practice. And view your market in light of swings in this and try to ignore everything else. It'll make life simple. Oh, and there's one last thing I neglected to do. So I always want to encourage learning. So let's do this. We notice that this swing about the same size. Now whenever you get a swing, I notice this isn't it, right? I want everybody to be curious and just reverse engineer and see if you can find where the swing was, and it can teach you a little bit about swing work. So let's just bring it back, bring it back, bring it back, bring it back, and see what we can learn. Alright, so it looks like it's pretty close to this guy. And this is a lot different than, say, telling you what to do ahead of time. If you can identify a reaction, like, you can go backwards and get curious and make your own observations. So I always want to encourage that no matter what we're learning.